All right, welcome to this explainer. Today, we're diving into a source that makes a really bold claim. Reading stock charts is easy, actually. I mean, that sounds like it could be the key to a hidden treasure, right? Let's find out if it is.
You've seen this picture before, haven't you? These screens just full of a crazy maze of lines and bars and numbers. And you gotta wonder, is this the secret sauce? Is this what it takes to get rich, mastering this whole complex language?
Well, get this. The source we're breaking down today argues the exact opposite. It says not only is this not the secret, but that the whole idea might be a complete and fundamental misunderstanding of how markets even work.
Okay, so let's really get into what we're going to call the stock chart myth. This belief that the key to financial success is hiding somewhere in all those complicated screens.
I mean, you can totally picture it, can't you? The lone genius in a dark room, just surrounded by the glow of like 6 monitors, decoding secret messages in the squiggles that the rest of us just can't see. It's this very intimidating, almost heroic image of what real investing is supposed to look like.
In this whole myth, right, it's built on these core ideas that to succeed, you have to master some secret language. You have to know all this complex jargon, and that somehow you can predict the future just by looking at the past. It's all about finding that one magic pattern by drawing just the right lines on a chart.
So this whole business of staring at charts, of trying to predict the future, what's it actually called? Well, this approach has a name, and it's called technical analysis.
So here's the official definition. Technical analysis isn't about whether a company makes a great product or has amazing sales. Nope, it's purely about the chart itself, the history of the stock's price, and how many people were buying or selling it at any given time. It's all about the stats.
And the process, it seems logical enough at first glance. You just look at what a stock did in the past, you hunt for these recognizable patterns, they have all these crazy names like Head and Shoulders, Cup and Handle, flags and pennants, and then you use those shapes to make a forecast about where the price is going to go next.
And really, it all boils down to this one very powerful central idea, that the chart tells you everything you need to know. You can forget about the company's earnings reports, forget about news in the industry. The theory is that all of that stuff, all human emotion, it's already baked right into that one squidgy line.
Okay, but this is where our source material really throws a wrench in the works. It basically frames this entire field not as a science, but as an attempt at reinventing the laws of math.
And our source just lays it out there with this quote. It's a really powerful statement, right? It suggests that technical analysis isn't just a little bit wrong, but that it's fundamentally flawed on the level of trying to prove that 2 + 2 = 5.
So what does that really mean? Well, the argument is that most of the day-to-day, minute-to-minute movements of the stock market are basically just random noise. And technical analysis is really just our human brains trying so hard to find order in that chaos, to see a meaningful pattern where, in reality, there might not be one at all. And this example just perfectly illustrates the disagreement. A technical analyst might see a very specific shape on a chart, like the famous Head and Shoulders, and say, aha, that's a reliable signal the price is about to drop. But the source's rebuttal is, well, that's no different than looking up at the sky, seeing a cloud that kind of looks like a dragon, and believing you've actually found a dragon. You're mistaking random chance for a predictable signal.
All right, so if trying to find dragons in the clouds isn't the answer, then what is? Our source points to a dramatically simpler alternative, something called market cap weighting.
Now, it might sound a little technical, but I promise you, the concept is incredibly straightforward. A company's market cap is just its share price multiplied by how many shares exist. That's it. It's just a simple way to measure how big and valuable the company is in the eyes of the market. And market cap weighting just means you own stocks in proportion to their size.
Or, hey, let's put it this way. Just think of the entire stock market as one giant pie. With this strategy, a huge company like Apple gets a really big slice, and a smaller company gets a tiny little sliver. That's the whole idea. Simple.
And here's what that actually looks like in the real world, with a major index like the S&P 500. You can see the biggest companies, Apple, Microsoft, they naturally take up the biggest portions. The key thing here is you're not trying to guess which company is going to be the next big thing. You're just owning the whole field, weighted by who's already winning the game.
And the logic behind this is a complete 180 in mindset. You are no longer in the prediction business. You're in the ownership business. You're just accepting the market for what it is today and letting the collective wisdom of millions of investors do all the heavy lifting for you.
Okay, let's bring this all together. What is the key takeaway here? It really all comes down to a choice between two totally different philosophies: complexity versus simplicity.
Let's just break it down side by side. Technical analysis is all about trying to predict the future. Its focus is on timing the market perfectly. It is super complex, like trying to read tea leaves. On the other hand, market cap weighting is about owning the present. It's focused on simply being in the market, and its complexity is low. It's like owning the whole farm instead of trying to guess which crop is going to grow best next season.
So really, the crucial point is this choice. Are you going to spend your time and energy trying to be smarter than millions of other people by finding secret patterns? Or do you just accept that the market as a whole is pretty smart and decide to just ride along with it?
And that leaves us with one big question for you to think about. In our financial journeys, we're often made to feel that the more complicated path, the one with more secrets and more jargon, must be the better one. But is it possible that the simplest path is actually the most powerful one?